Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The third quarter is developing better than expected in most parts of the world. But first, this week will be all about Wednesday's RBNZ OCR review, where a 25 basis point rate cut is widely expected. That will probably push term deposit rates down and floating mortgage rates down too, but it is unclear how it will affect fixed home loan rates. After that, we'll get the local consumer and business sentiment updates. In Australia, the key data released this week will be Wednesday's monthly CPI data for October, expected to dip from 3.5% to 3.3%. Elsewhere, there'll be a lot of data from the US early in the week as they clear the decks with shutdown-delayed data before they go on their 4-day Thanksgiving holiday weekend break. Other countries will be releasing GDP and inflation data too. And in China, attention will turn to October's industrial profits and the official manufacturing and non-manufacturing PMI readings for November. In Japan, markets will focus on October's labour and industrial production data. In India, GDP figures are expected to show that the country grew at a slightly slower pace in July to September, although analysts still anticipate growth above 7%. And the Bank of Korea will review its policy rate too, but no changes expected there. Over the weekend, China reported that its foreign direct investment inflows were still struggling in October, but they were at least positive for the month. They rose marginally more in the October 2025 month than the weak October 2024 month. For all of 2025 so far, these flows are still 10% lower than the same period last year. In India, their very strong economic activity expansion eased in November, but only slightly, and is still rocketing along at a very fast pace in both their services and factory sectors. But of note here is that price pressures are easing. And Japanese exports came in stronger in October than expected, up 3.6% from a year ago, when a 1% rise was anticipated. That dovetails into better than expected flash November factory PMIs for Japan, but it isn't quite at the expansion level. But their flash services PMI certainly is, and it expanded faster in October than expected. And the Bank of Japan is close to raising their policy interest rate above the current 0.5% when they next meet on December the 18th. If not then in the January meeting. And in Europe, rating agencies Moody's has upgraded Italy's sovereign rating one notch to BBB and revised its outlook from positive to stable. They said Italy's consistent track record of political and policy stability has allowed their first upgrade in 23 years. In the US, the S&P Global Factory PMI dipped, but is still reporting a minor expansion. Their services sector PMI expanded faster to a moderate level, and this was better than expected. Of concern, however, is that both these surveys report input cost inflation accelerated sharply in November, hitting its fastest pace for 3 years. Of course, tariff taxes were the predominant reason cited. It may seem unlikely there will be a rate cut on December the 11th when the Fed meets next, but one important Fed member does still see a cut possibility. But business activity might be expanding, but American consumer sentiment, as measured by the University of Michigan survey, confirms it's now at record lows. The final November survey reports consumers are very frustrated about the persistence of high prices and weakening incomes. The spoils of expansion and success are accruing to a very few, which is building a toxic divide there. Holiday weekend retail sales will tell us a lot about how most American consumers are feeling about the lead-in to 2026. On the trade front, it appears that the much-heralded resumption of soybean purchase by China from the US isn't happening, apart from token trades. The US Treasury 10-year yield is now at 4.06%, down 1 basis point from Saturday at this time, down 8 basis points for the week. And the price of gold will start today at $4,064 an ounce, down $20 from Saturday, but down $34 for the week. And American oil prices have largely held from Saturday to be just on $58 a barrel, with the international Brent price now just on $62.50 a barrel. These are both $2 lower for the week. And the Kiwi dollar is now just on 56.1 US cents and unchanged from Saturday, but down 70 basis points for the week. So far in November, it has devalued by 2.3%. Against the Aussie, we're holding at 86.9 Australian cents. Against the euro, we're still at 48.8 euro cents. That all means our trade-weighted index starts today at just under 60.9, and little change from Saturday, but down 50 basis points for the week. And the Bitcoin price starts today at $86,576 and up 2.3% from Saturday. A week ago it was at $95,780, so down 9.9% since then. Volatility over the past 24 hours has been modest, at just on plus minus 1.8%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.